for the next session on the topic Beyond the Bottom Line, CFO's role in shaping strategy and driving growth. For that, I would like to call Mr. Debnath Mukhopadhyay, CFO, Trualt Bioenergy. Mr. Debnath Mukhopadhyay is the accomplished CFO of Trualt Bioenergy and is a prominent figure in the Indian financial sector known for his exceptional project execution. India reflects his unwavering determination and commitment to his childhood dream. Born in Kolkata to Shri Debnath Mukhopadhyay and SMT Anima Mukhopadhyay, Debnath embarked on his path to financial leadership. He completed his BCom Honours at the University of Calcutta, followed by CA in 2001, MBA Finance from XLRI and LLB. His career commenced 243 years ago as a management trainee at Goodricke Group Limited, subsequently worked in various roles in ICICI Bank, Reliance Telecom, TIL Limited and renewable sector for over a decade. Can we have a huge round of applause and welcome Mr. Debnath Mukhopadhyay.
Hi, good morning. So this is a very interesting topic. So what is the role of CFO? The role of CFO is earlier, about 15-20 years back, the CFOs are the bookkeeper and to finalize the accounts and the audit and restricted to budget, etc. and all this. But over a couple of years, the CFO is no longer the bookkeeper of accounts and the finance, but also they are the active participants in strategies, in the business decisions and the various decisions, and also as a working as a co-worker with CEOs and also helping board and the external stakeholder to give the confidence about the business and the company's growth. So to start with, so as I mentioned, what are the role of the earlier CFOs? So like accurate and timely financial reporting, which is finalization of accounts, then budget, compliance with regulatory requirement, risk management and the financial operation and the strong financial control, the internal control, etc. All this was the role. What is today? Is understanding the imprinting complex data. So there are a lot of data analysis CFO is required to do and to help the CEOs to take the right business decision. Then the data analysis, strategically about the future of the organization. Then outlining, executing a calculative approach for the cost management. So the cost control is not become a financial or the accounting job. It's a business decision. You need to get into the business and to understand that if I reduce the cost, if I cut the cost somewhere, my business should not be impacted. So that is the CFOs cannot take a decision unanimously or independently. They have to collaborate with CEOs and CEOs on this. Then the effective, so it's basically the one is the statutory accounts as per accounting standard, as per Ind AS, all these things is one side of it. It's more important for the CFOs today is to prepare the management accounts and to help the CEOs to take the right decision. The management accounts is a monthly closure, basically what is required to be done, and on a month-on-month performance, how we are going towards the budget, towards the annual business plan, and what action is required to be taken. So all these things is today's role on this. Then there are various building up a strong relationship with the, as I mentioned, with the other executives like CEOs, with procurement team, with the marketing team, with production team, everywhere. Then is a strong leadership and interpersonal skill. So it is not only the CFO's role is not to interact with the banks and the auditor. It's also required to interact with the investor, is also required to interact with the various vendors who are the strategic supplier and also to the customers. So that's the role today. And obviously to team management and demonstrating the leadership capability inside the organization. So what is the shift for the CFOs? Is from the financial book gatekeeper to a strategic visionary. How we do that? So it's there are a lot of things a CFO has to do today. It's what is the production, how is the production is going on, how is the sales is going on, when do I procure, what quantity do I procure. The CFOs are in a large organization. CFOs are also part of the internal procurement committees. Various, if I sell to a customer or if I take a project, so that cash flow, that the terms of the sales, all these things is required to review and to take the decision and to help CEOs to take the right decision on this. Then, as I mentioned, if it's a EPC company, say let's take an example for EPC company, there are a lot of tenders comes. So when before taking the tenders, the tender document is required to analyze, to prepare the projected cash flow and to do the sensitivity analysis, which the CEOs or the marketing people cannot do it. And that's the role of the CFOs to help to those business leaders. Then they collaborate with as I mentioned, they collaborate with the CEOs and the other top management people, and they help them to take the right decision for this. What are the strategic influence for the CFOs? So let us have see some questions. What are the factors contribute to the value to the organization? So the CFO's role is not to take the accounting decision, but also to take the add value towards the organization. Then what is the newest development? What is the best technology? What is the new opportunities for the business? What is the, if I'm working in a particular sector, that what is the new opportunities is into that sector? How do we grab that opportunity? How do we increase the market share? All these things CFO need to do. Then what are makes the most of our assets addressing the, so is the asset utilization or the capacity utilization, whatever the investment we are doing as a CFO, we take the decision for the investment. How do we utilize those assets? How do we utilize our capacity best? So that is required to understand and to help the people. And obviously how the competitors are, what are the strategies competitors are doing? What strategies we need to take to be the best in the competition, in the market. So and how do I become a market leader? All the strategies CFOs need to come out, because the CFO has a lot of data which the other stakeholders do not have. Say CEOs do not have, COOs do not have. So that data is required to be analyzed by CFOs and to help them to the other stakeholder for those decision making. What is the adaptability? So it is a continuous process. So the adaptability is in terms of the technology, in terms of the regulatory requirement, in terms of the strategic leadership of the business acumen, and all the change management, and obviously the required investment to be done for the change management. So in terms of all across. So in terms of if there is a technology change, so do I need to invest at this stage? What is the size of the company? What is the growth plan of the company? What is the investment is right to make at this stage? So those are the certain things is required to be done. What are the other market players are doing in the similar space? So all this analysis is required to be done by CFOs and to help them to the business, to board, to the stakeholders, etc. So certain decision making which are influenced by CFOs, apart from the general accounting and the finance related work. So it's a capital allocation. So if I having a 3 project, how much capital do I allocate of each project? Which project is the priority? When do I mobilize fund more better? That's more important. Second is cost management. With my existing operation, do I incurring the optimum cost, or I need to cut, or I need to increase? That decision is required to be taken by CFOs. Then the operational efficiency, as I mentioned, the capacity utilization, and also the production, and also to analyze the production data as well, to get the reports from the production team, whether there is any downtime, what is the reason for downtime, what is the unplanned downtime, how much financial loss I have, what is the unabsorbed overhead, what is the overabsorption of the overhead. So those data is required to be done. What is the labor hour rate? All these things is required to analyze by CFOs and to help the company to take the right decision. Then budgeting is obviously it is there. Or what is the merger and acquisitions? So apart from the organic growth, so inorganic growth, how the company will grow in the similar space? What is the merger acquisition? What is the right value for that? Then the CFO has a very active role to negotiate on the purchase consideration on the deal. So that is not be possible by the other stakeholder in the company. Only CFO can do that. These negotiations. Then the analyze the current situation. What are the alternative course of action? Whether the plan A will work or the plan B or plan C, which is the better one for the company. That CFO need to implement. Then encouraging the innovations, which is a continuous change. The most important is the risk management. So there are external risks, there are the internal risk. How to manage the risk? What are the actions to be taken for the risk management? For external risk, what are the things? If there is any regulatory intervention is required, we need to intimate to the board that these are the things to be done to the ministry or to the regulator, and we need to provide the representation and all these things. So those CFO can help to the board and the CEOs to do that. Internal risk management is required to be done based upon the my production risk, my raw material assurance risk. All these things is required to be done by CFOs. So as I mentioned, the specific risk management, one is the financial risk. Financial risk is obviously is part of CFO's earlier role as well. Now the strategic risk is, which is competitive risk, technology and the regulatory. This is the new things the CFO need to do. Then the operational, in my existing operation, what is the business interruption risk, fraud, legal risk, is there any litigation is there? So those risks, how to mitigate that, how to handle those risks. Then is the negative publicity, the loss of customer confidence. So also customer data is required to be done, employees data is required to analyze by the CFOs. What is the report? What is the customer survey report? What is the vendor survey report? What is the employee survey report? All these things required to be seen and to discuss over the board meeting and guide the company to get into the right direction. There's a digital transformation. So as I mentioned, for the digital transformation, the investment should be inside according to the growth plan and the current size of the business. So being a small company, one company should not take a decision, say maybe a large investment into the IT, that the ROI may not become over a short period of time, or there may be a risk on that. So that the IT risk, the transformation risk is required to be, those investment decisions is required to be analyzed based upon the strategic alignment, based upon the technological need. Where do I need this technology, or I can adopt maybe 1 year later. That needs to analyze. What is the priority? Maybe the technological transformation in a phased manner I can do. So whether I need to do it a phase 1, phase 2, phase 3 at one go, or do I need to do it in a staggered investment? That needs to be done. And obviously to analyze the ROI on this. What is the growth of the company, and based on that, if I make the investment, then what is to be done. And also this is a very important thing for the digital transformation, is whether how to train the people, how to increase the capability of the current human resources. Those things is required to analyze. Whether my current resources is capable, if I give the training they will adopt that, or even if I give the training they will not be able to adapt. I need a different class of people for that technology. That is more important. And the third one is the user acceptability. My existing user has to accept it in a very simplified manner. So my technology investment should not be a complex technology tomorrow, which should be simplified and which should be easy for doing the business and the day-to-day work. Then another most important, that is a very important factor for sustainability and ESG. So there are a lot of things is happening over the industry on the sustainability and ESG. So there certain investments are required for this ESG, to improvise the ESG and to do the sustainability reporting and so on. So for that, the cost benefit analysis, resource allocation, SOPs, and also obviously to analyze the ROIs on these investments. And obviously that the sustainability risk management is required to be analyzed to take any decision, to any investment decision on this particular area. What are the challenges? So is the measuring impact. So every data, every decision may not be measurable. So that CFO is facing some challenges to measure the data and to have the financial impact of that. And obviously the second is if the ERP system, the technology is not upgraded, then the CFOs are facing a lot of required data, required information, which may not be in a legacy system, may not be available. So that there is a challenge inbuilt, but that needs to be overcome on this. And obviously the different stakeholder has a different expectation, say bank, customer, vendor, board, investor, they have a different level of expectation. But the data and the information is one. So that needs to be presented according to the stakeholder need and to satisfy them. So that's another challenge for CFOs. Then the stakeholder communication. So there is a lot of stakeholder communication is required to be done by CFOs on the maintaining the transparency, trust, confidence on this. There's a financial reporting and regulatory compliances, which is the ROC, income tax, SEBI, everybody is there, so that needs to be complied with. Those sort of reporting is to be done. Then the company's growth, strategic vision, those also is required to meet. Then the investor relation, market confidence. If I speak with the investor, investor community is very small globally. So that we need to give confidence to every investor. We should not ignore to the small investor or a large investor. So everybody should be taken equally. Everybody should be given equal importance, and those things to be done. Managing the expectation of handling the market volatility. There are a lot of challenges in the market, a lot of regulatory challenges. All this is required to be handled by CFOs. Then the crisis communication, if the company is facing any challenge, any regulatory challenge, how to communicate, how to give the positive impact, how to give the confidence to the investor, that is very important for CFOs to take that responsibility. Overall, what is the role of, how the CFO's role has transformed? So CFOs needs to look beyond the daily grind of anticipate the future trend. The CFOs understand what is happening in the industry and how it could impact the business. The spot opportunities and the innovation that can improve the existing process, that needs to take a decision on a spot. Address the potential issues and that could affect the business growth, prioritize the issues and to address and to give the importance for that. Empower and transform the finance team so finance is no longer just a bookkeeper or an accountant. They have to provide the data. They are the part of the strategic team, and they need to help all the stakeholders, all the other stakeholders with those data, information and expertise knowledge to improve the business, to improve the growth and to give the confidence to the stakeholders. Thank you.
Thank you, Mr. Debnath. I would request you to please stay back on the stage, and to do the felicitation, I would like to call Mr. Shailesh Agarwal from Quest Global to do the honors.